every day the financial media obsesses over Bitcoin, yet every day they ignore gold. I mean, we don't have to screw everybody completely and say, hey, you bought a U.S. Treasury, you're going to get zero. We don't have to do that, right? We could say, look, we're going to give everybody 40 cents on the dollar. Tudor Jones wants to inflate it away. I would rather it just get defaulted away. That's where they're trying to move in another direction right now in this BRICS summit. They're looking for ways to extricate themselves from this relationship so that they don't need to have as many dollars because they can trade, amongst themselves without the dollar. When the dollar collapses, that kind of destroys the whole military industrial complex because the U.S. can't afford to sustain it anymore.
Hello, everybody. My name is Paul Buitink, and welcome to the Reinvent Money podcast, a show about money and geopolitics. If you enjoyed this video, please like it, share it, and comment, and subscribe to my channel. Today, for the second time, my guest is the one and only Peter Schiff of Schiffgold and Euro-Pacific Asset Management. Hi, Peter. Great to have you back on.
Hey, Paul. Thanks for inviting me back on.
Yeah, last time we spoke was in May, the 14th of May, and gold was around $2,350 per troy ounce that day, and silver around $28.60. Right now, the 23rd of October, even though the price is correcting somewhat, I see gold at $27.19 and silver at slightly below $34. So what an amazing ride it has been over the past 5 months.
Yeah, in fact, last night we were almost at, I think, $35 on silver, just a few pennies away. And we were very close to, maybe $27.60 on gold before we had today's decline. But I wouldn't imagine that there'll be much more to this decline. The dips have been very short and shallow. There's a lot of money that's moving into the precious metals market that's going to continue to drive the prices much higher.
Yeah, so are you enjoying the ride then? Because you've been predicting higher metal prices for a long time. So are you properly enjoying this ride?
Well, I mean, I have a lot of exposure. So, yeah, I mean, it's, but I still think it's a long way from over. So to me, it doesn't really matter because I wasn't planning on selling any.
No. So gold, we've seen all-time highs. Silver, of course, has been rising faster even in gold. In euro terms, this year alone, over 40%. Are we going to break old records like 2011 or the Hunt brothers records in 1980?
For what, silver? I think silver is going to take out 50, so it's going to take out that high. It could do it this year, we'll see. But I think if it doesn't do it in 2024, I think the odds are very high that it will in 2025.
Yeah, what are the key drivers?
Gold is already on pace to have the best year since 1979 in percentage gains. I mean, we'll see because the year isn't over yet. But if it continues its gains throughout the rest of the year, if it stays on the same path, it should be the best year since 79.
Yeah, what do you think are the key drivers in this particular rally?
Well, I think it's the debt and inflation. I think the Fed aborted the rate hiking campaign too soon, and now it's cutting rates. And I think that by next year, probably early next year, they'll be back to QE. And all this is negative for the purchasing power of the dollar, for the value of U.S. treasuries and other debt instruments. And it would argue to move into gold as a hedge against credit risk, inflation risk, all the risks that would want people not to own fixed income, not to own dollars.
Yeah, and to what extent is also the geopolitical situation affecting the price? Because currently we have the BRICS summit in Kazan in Russia. I just saw that Putin has complained again about the dollar being weaponized, and they're proposing a new payment system. Of course, we've heard that many times over the past few years. But how much of a factor is the changing world order?
I think, it's a factor because foreign central banks have been major buyers of gold. And I think that geopolitics certainly plays a role in that, because to the extent that foreign central banks are too beholden to the dollar, they're vulnerable to sanctions and other ways that the U.S. may retaliate. against countries or leaders that are doing something that, the president disagrees with, like with Biden and the sanctions on Putin in Russia. So I think that was a warning call to other countries that, you better lessen your dependence on the dollar if you don't want to be in such a vulnerable position. And if you're going to get out of the dollar, you have to get into something. And the most logical something to get into is gold.
Yeah. No, I agree. You run a gold company. What are the main trends you see in the US? Because you mainly serve US customers, right? But do you see? Because last time we spoke, you said the business was relatively soft given the rising prices. I run a company in Holland too. We it's called hollandgold.nl. And with /EN, you can also see a English version website for European customers. But we see this month, for example, it's a record month for us. We see mostly people buying, actually. Previous times, we saw quite a few people selling too. But in this rally, particularly this month, we see a lot of people buying, despite the high prices.
Yeah, I mean, it's picked up maybe a little bit, but it's still slow compared to, what it had been in years past. And it's slower than you would expect, given where the price of gold is. You would think there would be more enthusiasm in the general public for gold and that there'd be more buying, but that's not happening. And in fact, you get very little media coverage of gold's, run to record highs. Even the financial media doesn't really pay attention to it. They'll talk about Bitcoin every day, even though it hasn't made a new high since March. So it's been trading sideways for 6 months. Yet every day the financial media obsesses over Bitcoin. Yet every day they ignore gold when gold is far more significant and it's making new highs, something Bitcoin isn't doing. And in fact, Bitcoin's high in terms of gold was 3 years ago. So Bitcoin is lower by about 35% in terms of gold than it was 3 years ago.
So how come? So, is that the lobby power of Bitcoin?
Bitcoin is failing against gold.
Yeah. How come they are more interested to talk about Bitcoin? Could it also be the lobby power of some of the Bitcoin players that are better able than the gold industry to have their voice?
Well, they're advertisers. There's the big advertisers. I mean, they're buying off everybody. They're buying the politicians. They're buying the financial media. They bought off Wall Street. Now Wall Street has a vested interest in crypto because they're running Bitcoin ETFs and Ethereum ETFs. But eventually they run out of the ability to perpetuate the pyramid, and it collapses.
Yeah, we did see a few big names talk positively about gold over the past few days. I saw on the Financial Times this interesting article by the former PIMCO CEO, Mohammed El Erian. He had a few interesting things to say about gold and that the West should pay more attention to the rising gold price. We had Paul Tudor Jones speaking positively about gold. Also Bank of America saying good things. So maybe things are changing, you think, in the media? Could we see perhaps more coverage over the next few months?
No, I mean, very slowly. I mean, the media, I think, is still very much married to the status quo and, the talking points of we have a sound economy, everything is good. We know the Fed these guys are geniuses and they're getting rid of inflation and, just buy and hold. Everything is great about the stock market and the bond market. So I think it's going to take a while before they can see the opposite is true. I mean, even now, the bond yields are rising. The yield on a 10-year Treasury and a 30-year Treasury is now risen by 50 basis points since the Fed cut short-term rates by 50 basis points. And the media attributes that rise to the stronger economy, which is not what's happening. The economy is weak. We just got one jobs number that, people interpreted as being strong when it really wasn't. But the rest of the economic data still confirms that it's a weak economy. The reason that interest rates are rising is because the Fed has made a mistake in cutting rates. I think the bond investors are starting to figure that out. Gold investors figured it out a while ago. That's why gold is moving to new highs. So we're going to have more inflation because the Fed is cutting when they should have continued hiking. And the economy is going to weaken. So we're going to have even bigger budget deficits. And the Fed is ultimately going to finance them by returning to QE. And in fact, the higher long-term interest rates go, the more pressure is put on the Fed to do something to stop the rise. And the only thing they can do is QE.
Yeah, it's also crazy that when they say the economy is strong, yet they have budget deficits of 6.3%. I mean, how does that make sense?
Yeah, I mean, it makes more sense that the economy is weak, and that's why the deficits are so high. Because if the deficits were this high and the economy was strong, just imagine where they would be if the economy was weak. The reality is it's already weak. The numbers just don't confirm it because of the way they're calculated. But you can't lie about the tax receipts. They are what they are. You can't lie about the government, what they're spending. So the national debt is going up. I mean, they do lie about the budget deficits. That's why you can't look at the official deficits. If you want to know what the real deficits are, you have to look at how much the national debt went up in that given year. So the government will say, oh, we had a $1.8 trillion deficit for this fiscal year. But then you'll notice that the national debt rose by $3 trillion in that same fiscal year. And so that extra $1.2 trillion was money that the government spent that they didn't have. They just put it off budget, so they didn't count it. But if you look at the rate at which the debt is rising, if the economy was strong now, you can just imagine where those numbers would be. But I think it's just the other numbers that are the lies, like the unemployment rate. The unemployment rate is much higher than what the government claims. The inflation rate is higher than the government claims. The only number that's lower is the GDP growth.
Yeah, because inflation has fallen to 2.4% in September. But what's the actual number then, you think? And where do you base that on?
Well, I think the actual number is probably closer to double the official number. And I don't obviously have real numbers because I don't keep track of these prices myself. But I know how the CPI is calculated and the adjustments that they make to the baskets. And the CPI was kind of reverse engineered decades ago to come up with a low number, just like the unemployment rate. They constantly change who's qualified as unemployed. So they have a lot of unemployed people that don't make it into the statistics. So they don't have to count them. That doesn't mean they're not unemployed. It just means they're not being counted in the official unemployment rate. But they're still there. They're not, they don't have a job. They're not paying taxes. And so we have these big deficits because we actually have a lot more unemployed people than are officially acknowledged by the government.
Yeah, it's the same here in Europe. So what's with the Trump trade? People talk about the Trump trade. And last time we spoke, you were not. You had a slight preference for Trump winning the elections, but both candidates were not going to make a big difference when it comes to the economy and the sustainability of the debt. But what exactly is the Trump trade?
Well, the Trump trade, obviously you can buy Donald Trump's stock itself. I mean, it's a pure bet on Trump being the president. The question is, how does the Trump presidency help that company earn money? We'll see. They don't earn any money now. They hardly have any revenue, but you never know, with the power of the pulpit there. The market had just been going up. That was part of the Trump trade. The GSE, Fannie and Freddie have been rising because people are hopeful that Trump will, re-privatize those companies. So I see, people have been buying those stocks. People would have thought that Bitcoin would be part of the Trump trade because he's promising to make America the Bitcoin capital of the world. Yet Bitcoin hasn't really been able to rally. It had a rally about 2 weeks ago, back up closer to 70,000, 69,000. But, now it's back at 66,000. It really has been going sideways. So there may be a Trump dump with Bitcoin, because people may have already bet that he's going to win, and that's going to be a positive for Bitcoin. I mean, I think Trump on balance is better for the markets than Harris, but the markets are way overpriced, regardless of who becomes president. Obviously, if corporate tax rates go up, that's worse for them than if rates go down. But the big underlying problems are there. And I think we have a debt crisis and an inflation crisis, regardless of the outcome of the election. The only difference in my mind is how they might respond to it. Not that I know that Trump is going to do the right thing. I don't. It's just that I'm confident that Harris will do the wrong thing.
And that means more inflation, right? The wrong thing is more inflation, and the right thing would be to have a proper default, like an honest default.
The right thing would be to allow the collapse and get out of the way and let it happen, and allow failures and defaults and restructurings, and it's to accept the pain, and then move past it and allow the free market to purge the economy of the excesses and the malinvestments that have been the consequence of decades of artificially low interest rates and all the mistakes that has resulted in, from a lack of savings to an excessive amount of borrowing and consumption and speculation. Trump likes to point to the trade deficits and talk about all the countries that have a surplus with us as if it's their fault, and somehow they're it's at our expense that they have all these surpluses. But the reality is we're relying on those imports because we're not able to produce the products ourselves. And even if we could produce them, we can't produce them at a price that anybody can afford to buy. And so we're then relying on foreign production, which has been propping up the economy. And not only have they been propping up our economy with their stuff, they've been propping it up with their savings. They've been loaning us the money that we haven't saved so that we can continue to live beyond our means.
But it's also a consequence of the fact that the dollar is the reserve currency. So these deficits are actually needed for people to hold dollars. And basically it's
if they want to accumulate dollars, they generally have to sell stuff to Americans because we're the ones that got the dollars. Because our government is the government that prints them.
Yeah.
But that's where they're trying to move in another direction right now in this BRICS summit. They're looking for ways to extricate themselves from this relationship so that they don't need to have as many dollars because they can trade, amongst themselves without the dollar.
Which would be healthy in the long run for the U.S. as well. So it will be a painful transition.
In the long run, yes. I mean, it's, we've been reliant on the productivity of the rest of the world and the savings of the rest of the world. It'd be better if we were self-reliant. It would be better if we had a viable economy where we produced the stuff that we consumed. I mean, we don't have to produce everything that we consume because we can still trade, but we have to produce something that we can export to import. We can't just rely on printing a press and have a service sector economy where we import what we don't produce and pay for it by printing, dollars. I mean, it's great while it lasts because, you get to, get all the benefits without the costs, right? You get all these goods without having to produce them. You don't have to do the investments, build the factories, deal with the pollution. You could just let some other country deal with that and just accept the goods as they're delivered on a ship.
Yeah. No, I agree. But is it then is the military-industrial complex going to accept a demise of the dollar or the end of U.S. hegemony? Because if the dollar would cease to be the world reserve currency, that has all sorts of consequences. Also for the power that the U.S.
Yeah, well, if the dollar or when the dollar, I don't want to say if, when the dollar collapses, that kind of destroys the whole military-industrial complex because the U.S. can't afford to sustain it anymore.
Yeah. But are they going to accept that?
If the dollar isn't as overvalued, we can't afford to spend all this money on the military. We can't afford to deploy the troops. We can't afford to supply the troops. We can't afford to, buy them what they need. We can't afford all the military hardware. We can't afford the planes or the ships or the tanks or whatever it is that, even the uniforms and the shoes, right? Well, we won't be able to afford them.
Yeah. So, but is the military industrial complex then going to accept that fate without a fight, or do you expect that?
Well, this
whole transition period will
try. I don't know how they fight it. I mean, if the dollar is going to go down, the dollar is going to go down. I mean, so far the dollar is holding up. In fact, it's gone up about 4% recently here as, people have seen rising bond yields and interpreted that as meaning that the economy must be stronger than we thought, and maybe the Fed won't cut as much as we thought. But once again, they're wrong. Rising bond yields have nothing to do with the economy being good. It's because inflation is going to be higher. It's because debt is going to be higher. And these factors are negatives for bonds.
Yeah, I noticed
and
that
the Fed
Mohammed
is cutting rates, which is fueling the inflation fire.
Yeah, but I noticed that Mohammed bin Salman of Saudi Arabia wasn't attending the BRICS summit. He actually met with the US. So maybe that's also the US trying to exert its influence on key players such as Saudi Arabia, not to ditch the dollar too fast.
The fact that all these world leaders, you've got major countries that are there in Russia, thumbing their nose at the U.S. because the U.S. is saying, we got to sanction Russia. Nobody can do business with Russia. Yet everybody, they're all showing up. They could have held the BRICS summit in India. They could have held it in China. They could have gone and held it in, the United Arab Emirates or South Africa or Egypt or any of these other countries. But no, they're holding it in Russia. And I don't think that's an accident. They're sending a message that, they don't care about the sanctions.
No, exactly. That's a middle finger, basically, to the West. So how does this honest default look like that you tweeted about earlier? Who's going to... because do you envision that the U.S. will default on towards all bondholders, or perhaps foreign holders first, or domestic holders first? How would that look like in practice?
A default?
Yeah.
Yeah, I mean, the reason I brought that up is I, was listening to Paul Tudor Jones talk about why, we have too much debt, and so we have to inflate it away. We have to create inflation so that we can bring down the level of the debt relative to our nominal GDP. So if GDP keeps going up because of inflation, then we can bring down the debt as a percentage of GDP and make it manageable. And I don't think that is the ideal approach, because in order to do that, we have to perpetuate the source of the problem. His advocacy is for the Fed to continuously hold interest rates artificially low, below the rate of inflation, so to have negative interest rates and to keep printing money, doing more QE. And that's just more of the problem. We need much higher interest rates. And I understand that we have too much debt for that. There's no way that the debt can be serviced at a much higher interest rate. But that is not a reason to keep interest rates suppressed, because now you're exacerbating the imbalances that underlie the economy. So my solution is, if we have too much debt, then we need borrowers to default so that we can eliminate a lot of that debt. Interest rates have to go up. So if that means that certain debtors go bankrupt, then so be it. And even including the U.S. government. I would rather have the U.S. government default on the Treasury debt and restructure it. I mean, we don't have to screw everybody completely and say, hey, you bought a U.S. Treasury, you're going to get zero. We don't have to do that, right? We could say, look, we're going to give everybody 40 cents on the dollar. So, yeah, you loaned us $1 million. We ain't going to pay you back $1 million. We don't have the money. We'll pay you back $400,000. Or what we could do is we could do something like this. We could say, you bought a U.S. Treasury bond, a 30-year U.S. Treasury bond, and your coupon is 4%. We're going to honor that coupon, but we're going to, you bought a 1-year Treasury bill, and it had a 4%, or you bought a 2-year that had a 4% coupon. We're not going to default. We're going to pay you 4%, but we're not going to pay you your principal in 2 years. We're going to pay it in 30 years, right, or 50 years. And so now the value of that bond collapses, because now it's a long-term Treasury, and interest rates would have gone way up. But the government won't have to worry about how the rising rates will impact that bond, because they've locked that low rate in. But people might think, well, this is not fair. People bought U.S. Treasuries, and if there's some kind of default or restructuring, people who bought U.S. Treasuries are going to lose money. Yes, but if we just create inflation instead, they lose purchasing power. So they end up in the same place. I just think that if we take the approach of inflating the debt away, that we're actually going to impose even greater losses, real losses, on our creditors than what they would be hit with if we restructured with, a partial default where they got back, a haircut on what they loaned. And in the meantime, we wouldn't be doing additional damage to the economy because we need higher interest rates to encourage savings, which would finance capital investment so we can produce more stuff here ourselves and, have a more vibrant economy. But we're carrying so much debt that we can't get there unless we get rid of the debt. Tudor Jones wants to inflate it away. I would rather it just get defaulted away. That's more honest, and I think it's actually better for the creditors, and it's much better for the economy. Of course, if I was going to talk my book, and I've got a very similar investment strategy to Paul Tudor Jones, minus the Bitcoin, inflation is much better for my strategy. And the reason that I'm betting on inflation is because that's the politically expedient path. I don't expect politicians to do the right thing. I expect them to do the wrong thing, and that is inflation.
Yeah, exactly. That sounds a bit like the US debt restructuring would look a bit like what we've done to Greece, basically. So locking the debt for changing the duration, lowering interest rates. Final question then to you, Peter. Since you brought up the topic of Bitcoin, I saw central banks like Norway and Switzerland buying Microstrategy shares, which basically is indirect exposure to Bitcoin. What if a few mature central banks would actually buy Bitcoin and would communicate that? Would that perhaps change your view? Or?
It just shows you how ridiculous these portfolio managers are. They're just probably putting a model in and they see MicroStrategy stock has gone up. And so they're buying it. I mean, that's what they own. They own large cap U.S. stocks. I mean, MicroStrategy is not part of the S&P 500, but, it's been a top performing stock. And so I guess in these wealth funds, they've included it. I think it's probably the most overvalued major company out there. I mean, I don't even know what their real business model is anymore. I'm not really sure what MicroStrategy actually does to earn money. Right now, they just borrow money and then they use it to buy Bitcoin. And they're able to borrow cheap, I think, because the lenders are under the delusion that it is somehow a hedged way to bet on Bitcoin because they know that, well, if it doesn't work out, it's a convertible note. I can get my money back. Right. So they're willing to lend money to MicroStrategy at a low interest rate because they think they have a free put on Bitcoin. Because they don't want to buy Bitcoin directly because it could crash and they'd lose everything. So they buy MicroStrategy where they get the upside without the downside. But of course, if Bitcoin crashes, MicroStrategy is going to default on all those bonds. So there's a lot more risk in those low yielding bonds, I think, than investors or speculators are bargaining for when they're buying MicroStrategy.
Right. Well, we'll see, Peter. Any final remarks?
Yeah, and I think some people who are buying Bitcoin may in fact be shorting MicroStrategy. There could be a trade there because it's so overvalued compared to Bitcoin. So if Bitcoin does go down, MicroStrategy could get killed. Like if Bitcoin went down from 60,000 or 66,000 to 40,000, MicroStrategy could get obliterated. I mean, so you could buy Bitcoin and short MicroStrategy, but at least if you short MicroStrategy and own Bitcoin, if MicroStrategy does go up, it's because your Bitcoin went up too. And it might be at some point that the MicroStrategy doesn't go up as much as Bitcoin because it's already at such a huge premium.
Maybe some maybe a few hedge funds are doing that.
Fund. It's a leveraged closed-end fund where they've leveraged Bitcoin, so you can figure out the NAV. And it's trading at a huge premium to what you would get if you just liquidated all those Bitcoin and sent everybody the money.
Yeah. Well, interesting strategy for a hedge fund, perhaps, or perhaps they're already doing that. Any final words from your side? Where can people find you?
Yeah, I just think that, people need to act quickly. The conventional wisdom is very wrong right now. They're about to be completely blindsided and surprised by the events that are going to play out in the currency markets, precious metals markets, bond market, equity markets. And so before that happens, people should invest now based on, what's going to happen, and what's going to surprise people. And so people should be getting their gold, getting their silver, getting into mining stocks, getting out of dollars, getting out of fixed income securities, U.S. dollar denominated debt instruments from any issuer. And you don't want to own these things. You're going to get clobbered. Jones was right about one thing: all the roads lead to inflation, because the road that doesn't lead to inflation won't be taken. That road's out of service as far as all the politicians are concerned. Yeah. So we're going to stay on the wrong road, and we're going to arrive maybe at hyperinflation. But people have to be prepared in advance, so they can contact Schiffgold and get gold or silver. In fact, we're running a special right now on junk silver. I think people should take advantage of that. And if you have portfolios, people should be contacting my advisors at Euro Pacific Asset Management, so we could talk about managing your portfolio. I've got 5 mutual funds. If you're kind of a do-it-yourselfer, you can buy my funds no load. Schwab, Fidelity, all the discount brokerage firms. You can learn about the funds on my website. In fact, if you're a small investor, you can buy the funds directly on my website. You don't even need a brokerage account. You just buy them. It's at Europac.com. You can get all the information on those funds. Keep listening to my podcast, Peter Schiff Show, on my YouTube channel or anywhere that they have podcasts. Schiff Radio is where I host it. I'll be doing another one on Friday. I'm interested to see how the BRICS conference wraps up, and if we get anything concrete coming out of that. So I'll be able to talk about that. But follow me on social media. I'm on X. I've got over 1 million followers there. So that's my main social media platform other than YouTube, but I'm on Facebook, Instagram, TikTok. I also have a newsletter, a free newsletter people can sign up for at sovereignshift.com. Comes out, I think, 2 or 3 times a week. We have a premium letter if you're interested in giving that one a try. But at a minimum, go to the website and sign up for the free one at shiftsovereign.com.
Perfect. Well, thanks a lot, Peter, for sharing your insights. And I look forward to a very bumpy ride. But as I always say to my friends and family, it's nice that gold is going up, but at the same time, it's also quite alarming and depressing, because it means that a lot of things are not going the right way, unfortunately.
All right. Take care.
Thanks, Peter. Bye.